IVM.
Folks, are you also someone who dismisses every SMS you get from your bank about any points you've accumulated? It's so rare to see these points convert into real cash or perks of any kind. And in the rare cases you can encash it, the process is so complicated and tedious. This is why I'm so happy with the Jupiter digital banking app. It's as simple as this. 1 point is equal to 1 rupee. Plus, your rewards never expire. Get 1% rewards on debit card and select UPI spends. You can check out jupiter.money to know more or download the Jupiter app on Android and iOS to get started. Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and I'm thrilled to welcome a returning guest. Good Lord, we really love returning guests on our show. And last time we met, I was in Delhi, and that was back in 2019. Man, that seems like some 300 years ago. Anyway, that episode aired in October 2019. My guest, Mukesh Kalra of ET Money, and we're going to catch up on what's been happening at ET Money. Lots of that right after this short break.
सफर, रास्ते, मंजिल और मुकाम अक्सर ये हमसे कुछ कहना चाहते हैं, पर हम हैं कि अपनी रोजमर्रा की जिंदगी में इन्हें सुनने से कतराते हैं। नमस्ते दोस्तों, मेरा नाम है केशव चतुर्वेदी और मैं आपको ले चलूंगा कुछ ऐसे सफर पर जहां आपको एक नया नजरिया मिलेगा सफर और मंजिलों को देखने का। आइए इन किस्से कहानियों में डूब जाएं, हर मंगलवार और शुक्रवार।
Mukesh, welcome back to Paisa Vaisa. Thank you so much. Thank you so much for returning to our show. Really good to have you here.
Great to be back, Anupam. It was last experience in itself was great. I actually messaged you that we got like 2 or 3 people who wanted to join ET Money after the podcast. So I'm huge ROI. So I'm very, very excited to be back.
Happy that there was product discovery. And that was a long time ago. That was
a long time ago.
Yeah. So how have the last 3 years been for you? Investor activity has been off the charts, man. Except maybe I don't know how things have been this year. But walk us through this journey since you were last on the show. How's it been? How have the last 3 years been?
Yeah, when we last discussed, we did not know that in 6 months, the world is going to change, right? So that was, I think, October, November or that time duration, I guess. It's been nothing less than, phenomenal. It has been a roller coaster for sure in between, but I think a lot of things started to, surprise us, frankly speaking, in the last 3 years. One is obviously COVID. Now it's a done to death story that COVID accelerated everything digital. But there were few insights that we really caught up on and which I would love to share. One is that, COVID provided that massive turbo engine of, people having time and people having money, right? Because there were savings that people were having because no commuting and all that. And there was time also, right? Because of, people being at home. And the third thing was that there is this, everybody started questioning that what am I actually doing? Am I really kind of living a life I wanted? Because COVID induced that kind of deep thinking of self-realization, what to do. And the moment you actually start to think about whether I'm living the life I want to live, money suddenly becomes center stage, because the first question that comes to your mind is, do I have enough money to actually kind of venture into new things, live life on my own terms? And that, I think, was a huge, huge realization for a segment of consumers, which took on to, investing in a big way. So, largely 3 things coming together: time, savings, more savings, and a self-realization. And that, I think, from a consumer point of view, took up the whole wealth space by storm. So I think, everybody has been kind of, beneficiary of that. And then the other thing that happened externally was, people like you who have actually created so much awareness, right, about how to look at personal finance, bringing guests in, your own understanding of personal finance is great. So I think as a combination, there was awareness that was created by the industry, but it actually got converted into real intent, right? That I should be doing some action with my money. And then there was this whole YouTube, content creation, whole ecosystem, which got rapidly created. Which converted that action into like real, outcome. So I think a lot of things, coming together in a very, very concentrated time period has taken, wealth industry, and brought in like insane number of customers. And we are happy to be beneficiary of that.
Yeah. So if you look at the early years when you were setting up ET Money versus this massive influx that has come in the last 2 years. Have you seen any interesting trends? For example, are people more interested in stocks versus mutual funds? Within mutual funds, are they interested in say passive over active? Are people asking more about what should I invest in an index versus what's the best mutual fund to invest? Just some trends, some insights. Maybe people are preferring SIPs and they're actually sticking on with them longer than what you'd have expected, or they're more of a trading mentality. Any insights that you can share that will help our listeners into understanding what's making sense of this huge influx that's come in the last couple of years?
Yeah, influx is, I think it is creating a different set of, behaviors. Like, I think one from a mutual fund versus stocks. I think it's not really about mutual fund versus stock. Mutual funds are more looked at like a long-term, way to invest and create wealth. Stocks is about really getting that dopamine of being able to actually get fast returns, right? So not long-term returns, but fast returns is how I would term stocks behavior as from a consumer point of view, right? But essentially, the only, at a very, very basic level, consumers end up actually chasing returns, right, at the end of the day. So whether it is mutual funds, whether it is stocks, whether it is crypto, whether it is, at some point, FD actually was a better option to. So I think that continues to be the underlying theme. The other thing, whether consumers are continuing with their SIPs, I can talk about ET Money platform, how we are seeing a changing trend, right? There is more money per user that is being invested. From last 3 years, our AUM per user has actually grown close to 80% year over year, right?
Wow.
So, we were just doing the analysis, a December 17 cohort of users, right, who started their journey on ET Money on December 17. Their first year investment was 50,000. In 1 year, they invested 50,000. December 19 cohort actually was at 82,000.
Wow.
And December 20 cohort is at 1.5 lakh.
Wow.
So there is obviously, more money that is being invested. Now, that could be multiple reasons. And one would be definitely the way we actually kind of focus on helping consumers, right? So they have more trust in the ET Money platform. So that's why they keep on giving us higher and higher share of their investments by. We are seeing SIP amounts also increasing. So, 3 years back, our SIP amounts per SIP would be around 14 to 1500 rupees. Now we are seeing it has jumped to 2400 rupees. We are seeing retention of SIPs to be also very high. Like there are perennial SIPs. People don't want to touch their, nest egg. And the insights around that has been very, interesting. Like essentially, a lot of times, SIP is not, the magic moment of SIP is not about returns. While the whole industry keeps on pushing ki our SIP returns are higher and all that. But essentially, from a consumer perspective, if you really look at it, it's about, I not spending that money. And in 6 months, I suddenly see like there is money, that I've saved. So it's like an automated way for the user to start looking at savings. So, so you start like 5,000 rupees, 10,000 rupees, and you just keep it kind of going. And in 6 months, 12 months, it has become 1.5 lakh, right? And that is the magic moment. Now, whether it has given you 10% return, 15% return, 20% return is secondary. So a lot of times, the first set of, insight and magic moment for the users who are starting their investing journeys is about SIP, is about really giving them that high of, yaar, apne aap paisa bach gaya.
Yeah.
Like I did not have to do much, and it actually kind of started to save. So that was one interesting insight and behavior around it. And what else? I think from where the money is going, right? You asked that good question whether people are trading on mutual funds or that sense at a very high pace. It's crazy. The average number of funds that an ET Money user actually holds is pretty high, close to like 13 funds.
Wow.
13.
13 schemes, you mean? You're saying so that
13
there's
schemes,
one.
Yeah, 13 schemes. Yeah. Is
on average, if I'm on ET Money, I'll have like 13 schemes. That's pretty high.
So that's pretty high. And when you actually look at the composition of it, right, it's like an insane amount of, same kind of funds. So, so we saw this amazing behavior. We started seeing that people are actually moving their money. So when they're redeeming, they're not actually redeeming for a purpose to actually buy something outside. They're actually redeeming to shift their money from one fund to the other fund.
Huh.
So it's more like, this fund is probably not performing, and hence I should actually move to the next best fund, right? And there is this whole chase of the next best fund, the next best stocks, right, that people have. So I think it's amazing how the investing behavior has become so much more, I would say, advanced. Also has some downside to it at an individual level, but I think it is kind of much more smarter than I think the industry makes it to be. Like industry wants it to be like people don't understand, we will teach. But I think it's the other way around. People have and consumers have become far more smarter, and that was a great insight.
Yeah.
And yeah, so I think it's been like, I can keep on talking about those insights, but I think it will take away a lot of time. But it's been
Sure.
like amazing journey.
Sure. And just hope that, if they're chasing returns on mutual funds, I hope that they get it, because it has tax implications and a whole lot of stuff. But like you said,
We'll
it's
come to
behavior,
that,
it's
yeah.
behavior, jo hai jaisa hai. So, okay. What's
Yes.
your outlook here from here? Because this year has been choppy, a lot of moving parts to it, right? Whether it's the US rates, or this war between Russia and Ukraine, or now interest rate hikes and recessions, and there's talk of a lot of stuff. So the last couple of years, if you had COVID, now that it hopefully appears that the worst of COVID is over, and now you're dealing with a whole lot of other stuff. So what's your outlook personally? Where do we go here from here?
When you talk about outlook, you're talking about markets, because markets,
investment
wouldn't
behavior.
actually ever. So there is no way for me to actually kind of take a shot at where the market is headed. Like, I think I don't believe there is a way to actually nail it in that sense.
Okay.
There is obviously a lot of factors in play, and everything that you can think about it to be fundamentally like right has always proven to be wrong, right? So market always surprises you. No point in trying to be oversmart about it.
Understood.
So,
let me ask it to you in this way before we in fact go for the break. Let's look at the fintech startup ecosystem here in India. You're among the earlier guys, right? You had your product out pretty early, and in that journey of whatever, I think 4 or 5 years since you started.
Yeah, 5 years.
This investment space has pretty much exploded. You would have like lots of investment platforms, and across asset classes, people are talking about democratization of stuff that was available for HNI is now being available for the retail investor. You're talking about different even asset classes. If you want to invest in debt, you want to invest in real estate, we can actually bring the entry limit down and stuff. So it's a very interesting and exciting space. If I just go by the guests that have actually come on Paisa Vaisa, just your view on the ecosystem as a whole, what looks interesting to you, where are we going, stuff like that?
Yeah. Okay. I think overall, ecosystem, we strongly believe that it's a classic case of misaligned incentives. It's very controversial to talk about it, but essentially, if you really look at it, every player in the financial ecosystem is driven by two ways to make money, right? Which is either by commissions or by transactions. And if you look at it, none of these ways are actually aligned to consumer outcomes. For example, the whole mutual fund industry never celebrates redemption. It is actually kind of frowned upon when a user actually redeems. Now think of it. That's the magic moment for the user, because if the redemption is at a profit, then the person has actually made gains. But the whole person commission business ensures that you actually are made to feel bad about it, right? And it's very counterintuitive, right? When we actually start to look at it from this lens. Similarly, the whole transacting ecosystem, which is making money off every transaction, whether it is the brokers, whether it is other players, you will see that they're creating an ecosystem for you to transact more and more, because that's where the money is being made. Now, when that happens, I don't think that ecosystem is bothered about whether a trade is profitable or not, whether the investment is profitable or not, whether the consumer is reaching their financial goals or not, right? So I think at an ecosystem level, there is this huge, misalignment of incentives that is the breeding ground for mistrust. And that's where I think a lot of, innovation possibilities are going to come out, right? So that's number one, I think, huge learning for us as at ET Money itself, that why is everybody asking the consumers to just keep on buying, and what is the impact of this? One impact is that people end up actually just accumulating products because you keep on buying, you become a shopper, right? It's like you are actually kind of just collating products based on the push that you are actually kind of getting from, whether it's a tip, whether it is a recommendation from, on based on the news, or, an influencer actually, peddling a stock, or all those things, right? Now, what happens is when you become a shopper, after a certain point in time, you accumulate so many products or so many different types of, instruments. Two things happen. You end up forgetting the whole purpose of investments was to either reach a financial goal or actually have a second income, right? And in that, the purpose is completely getting lost. So I think that is number one problem. The second problem is that the complexity of managing. So once you have actually kind of, if it is one product versus two product versus three products, the complexity of managing actually rises exponentially, right? And then once the complexity rises, then as a consumer, you are actually left with a confused state of mind for every decision making. So whether if the markets are up, whether you should be investing. If the markets are down, whether you should be actually investing. If you have additional money, where you should actually be investing in. If you want to remove money, from where do you actually remove the money? Because there are so many considerations. So what is actually this whole ecosystem is driving towards is an inevitable problem of the consumers not meeting their objectives of investments itself. So I think from a ecosystem perspective, we see a very strong displacement of value to players or to companies which are kind of geared towards aligning themselves to consumer outcomes, right? And this has been proven into multiple industries outside wealth, outside fintech, outside, right? Like, I think and to just throw in one stat, it's amazing, by the way, when we actually started going deep into it. Guess the amount of revenue that is misaligned basis commissions and transactions in the wealth ecosystem itself. Revenue pool I'm talking about.
Wow.
Take a guess. Wildest guess that you can do.
When you're talking about revenue pool, I guess you're talking about the entire commissions that people make off financial products, right?
Yeah.
And I don't know, maybe $1 billion, what, 7,000 crores, maybe 8,000 crores? I don't know. I'm just throwing this in the air because I read somewhere that that's the brokerage pool for stock markets. I don't know what it would be on the investment product side, of course. What hit me?
It's a massive 52,000 crores.
Are you serious, right?
Yeah.
Wow. That's huge, man.
And imagine it is all misaligned.
Wow.
So now eventually there has to be a movement towards an aligned, unbiased, platform. And I think, we are taking a shot at it with ET Money.
Yeah, because the fintech ecosystem was supposed to be the solution, right? In the whole disintermediation thing, giving the power to the consumer, let him take the right decisions because, the advisors or the people who sell mutual funds, their incentives are trail commission and stuff like that. But From what you're saying, wow, we just seem to have recreated the entire thing out here. So you've just taken the set of, the money from one set of people and given it to the others. If I've understood you right.
Yes, absolutely. I think, and that's where I think what does that do? Outcomes of that from a consumer point of view is unnecessary complexity, which is creating more confusion.
Yeah.
And then not hitting your investment goals itself, right? The very purpose of investment was to create a second income, right? Or or be wealthy enough so that you can have, the financial freedom or the freedom that you want to actually have in life.
Go on, sorry.
It's crazy. It's crazy in terms of.
I don't think this distortion can go on forever, right? At some point of time, the market will correct itself and good behaviors, or at least some amount of good behaviors, will come back into the system, and hopefully incentives will be aligned, right?
Yes. And that is the core reason of the mistrust, right? Because it's a breeding ground of mistrust at the end of the day, that when you're not aligned. And then, so eventually, for example, today, everybody is high on the bull run, right? That it is like the new set of investors have never seen a bear run, right? In that sense, it's not a run. It's like you don't really end up calling a run, but essentially it's a bear market. Then what happens, right? So it will actually start to hurt the ecosystem itself. If suddenly there is this huge easy come, easy go phenomena, right? And if there is no way that to see those positive outcomes and a bear market hits, people will be completely out of market. And once consumers are out of market or out of investing, then they go all the way to savings account, right? From a risk spectrum, they just don't park their they just park their money. They say that, okay, now no, I don't want my money to work, I want to just work, let the money rest, right? See,
And
today we are
this,
actually continuously thinking about how do I also work and my money also works, right? And gives me that advantage. So I think, eventually we, and that is a huge problem. That is, we're kind of sitting on that time bomb as an industry to really kind of see it through, and that's why everybody is like shaken up with a 5% correction in the market, because
yeah,
people suddenly kind of go out, right? So I think this state of affairs will eventually, across industries, have come to a point where you end up actually aligning your company, your business, your revenue models to consumer outcomes. I think that's where it should ideally settle.
man, it was long discussion into something very interesting. Yeah, let's just hope that it doesn't
Yeah.
come to people dumping the markets, at least just because
It,
you've had this kind of correction. But you're right there. Bear markets can spook the most sophisticated investors into making some kind of decisions.
yes.
Folks, on that note, we're going to take a small break. On the other side, we're going to come back and talk with Mukesh about ET Money Genius. Right after this break, we'll be right back.
Hello. It's been another great week on the IVM Podcast Network. On Cyrus Says Cock and Bull, Cyrus is joined by Vineet, Puneet, and myself, Silvery, Urf Antariksh. We discussed the IPL taking action against Rishabh Pant and the Florida bride that was arrested for lacing her wedding food with marijuana. Yeah, that's wild. On Paisa Vaisa, Anupam and Rahul Shah, co-head of research at Equity Master, talk about how to get started in the equity market. On All Things Policy, the Takshashila folks analyze the role of social movements in public policy. On Pulyabazi, Pranay and Saurabh look into electric vehicles and why their batteries seem to be failing. And on Say No to Drama, Chetna tells us how we can overcome saying no to everything. Do follow us on social media. We are IVM Podcasts on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, do tell a friend. It really helps us out a lot. Also, don't forget to rate us on any platforms you're listening on, and you can also check us out on YouTube. We are also doing a small listener survey to better understand how you respond to our shows and advertising on the network. We would really appreciate it if you could spare a few minutes to fill it. It helps us build better shows for you. And finally, we would like to thank our sponsors this week, SBI Life Insurance, India Water Portal, and Jupiter, a digital banking app.
And welcome back. Okay, Mukesh, before we get into ET Genius, let's take a few steps back. And what was the thinking when you thought of ET? Actually, you know what? Tell us what ET Genius is for our listeners. Maybe some of them don't know about it. Tell us what it is, and therefore, what was the thinking when you designed this product? Let's start that.
Sure. So 80 Money Genius gives you actually a set of investing strategies which have proven to gain more and fall less across market scenarios. And it is hyper personalized. It gives you a portfolio that you can invest in based on your personality. That portfolio has allocation into equity, into debt, into gold. And it also recommends you how much you should be investing in each of these asset classes. It breaks down equity into domestic and international. So what you get is a portfolio of domestic, equity, international equity, debt, and gold. And you could actually execute on these, investing strategies via mutual funds or via stocks and ETFs. So you have both the options. In mutual funds, you get index funds as the recommendations inside it. And the next thing that it does, it actually gives you allocations, right? That how much you should be investing in each of these asset classes. On stocks, it gives you top 8 stocks based on a multi-factor strategy that we have. And then debt ETF and a gold ETF as a combination. The smart thing about it is that it gives you when the markets are changing. So we have Genius actually keeps a hawk eye on all the market signals, whether it is domestic equity markets, global equity markets, interest rate scenarios, and all that, and then recommends you a change in your strategy based on those on a monthly basis. and that is what we call as rebalancing, thing. And then it actually ensures that your asset allocation is always in the right, places at all times. So that's what ET Money Genius is. It's a set of investing strategies
And
proven to actually give you close to a 80% higher returns than benchmark,
nice.
and a 40% additional protection in bear markets.
So yeah, I mean, how did this product evolve over time? I mean, where did you guys think about this, and what is the ideal user? Is it applicable to all users? Just walk us through the thinking out here.
Sure. I think while we have been building ET Money, we've been collecting tons of insights, and we discussed about some of the insights in short. But that actually feeded into what we have created as Genius, right? So one was definitely that thing that we talked about, misalignment of incentives. So is there a way that we can actually kind of create a company which is focused around consumer, goals and outcomes? The second thing was more users, more products, creating a high amount of complexity, increasing management cost for the user exponentially, consumers becoming super confused, right? So that was the second insight. Then we looked at how do we solve this problem? How do we and then we looked at what are the best investors in the world have done. So we looked at, what is the investing strategies of various, best investors that you can think of, whether it is Warren Buffett and more, right? Without taking too many names. But essentially, we just looked at what is it that the best investors are doing. Then we looked at what is it that people who have money, which is the HNI segments, are doing. And then we actually collated that what is that intelligence that actually helps consumers, helps people create wealth. And those actually led to tons of, insights which fed into Genius. So the number one insight for us was, when you're investing for wealth creation for long term, cutting risk, if you start cutting risks down, returns are taken care of.
Okay.
So instead of actually saying that I would maximize my returns, if you start to say that I will minimize my risks, the moment you minimize the risks, that means your returns will automatically kind of be higher, right?
Yep.
So instead of, so that was one thing. So you look at any investor in the world, they never talk about that, in this stock, I'm expecting, or in this particular asset, I'm expecting a 50% return or a 50% IRR or whatever, that 15% or 10% IRR. Everybody talks about that there are multiple risks that can lead to, and so there is lesser risk in a particular instrument, and hence we favor that.
Sure.
So I think cutting down risk was one big insight, and ensuring that returns are taken care of there as a function of that. Second insight was 9 out of 10 times your investment success is actually based on asset allocation. So just as an example, I think everybody keeps on chasing that multi-bagger. It has this, it has this amazing adrenaline push, right? That if you hit a multi-bagger stock or any instrument, then you feel great about it. But if that multi-bagger is just 1% of your portfolio, it is not going to actually meaningfully change your returns. So if 99% of your money is still in savings account, and only 1% of that is in that multi-bagger, you have actually, even if it runs 10x, right?
Yeah.
The absolute return that you will actually make is just 10% higher, not 10x. But I think from a consumer point of view, there is this chase of a multi-bagger. And if, on the other hand, if you would have actually, say, invested 50% of that money into just equities, you randomly take any equity and be in that equity asset class, you would have made far more money.
Yeah.
I think that was the number 2 insights, that 9 out of 10 times investments succeed because of asset allocation, not because of a single individual multi-bagger.
Walk us through how this works. Yeah, just how would this, like, if I log on to ET Money, I've downloaded the app step by step. How will this work? Do you first, for example, do a risk profile of me, get my goals, figure out what my expected rate of return is, what my time is? Is that how it works? Just walk us through a live case out here. Let's say that I'm a 25-year-old. I've just hired my first job, and I want to figure out my finances for the next 5 to 10 years, or whatever use case you think is relevant for this.
Sure. So the way it actually works, right, is it brings all these insights that I was talking about, right? That all these together. one another insight was that, till the time the users don't understand themselves as an investor, if you don't understand yourself, you will end up actually kind of, taking actions which will lead to like negative impact on your returns or wealth creation, because it will break the compounding, it will break a lot of stuff which you should be continuing to do. So what we did was, we actually, the first thing that the Genius does, is actually helps you with something called as an investor personality. And that's the first step to personalization, right? What it does, it interestingly actually humanizes the whole profiling or the risk profiling that people talk about. We went really deep to understand how, and if you really look at it, if I want to personalize to your goals, I have to first help you understand your biases towards risk and return. And a lot of times, because you're emotionally driven when it comes to money, you end up taking wrong decisions because you don't understand yourself better. So we actually painstakingly figured out a way to do this investor personality. What it does is, it is a set of questions, and it assesses three big aspects of you as an individual. It will help you understand how confident are you in terms of decision making. It helps you. So what is the likelihood of you taking a fast decision versus a thought through decision, right? And when you take those decisions, would you stick with it? So that it assesses that aspect.
Sure.
The second thing that it assesses is, how is your loss aversion? So it tells you what will be your psychological response in a scenario when you're losing money, right? The higher the sensitivity to losses, the less risk you are bound to bear, right? And a lot of times what happens is, if your loss aversion is, say, is very low and you're very sensitive to losses, what happens is a 5%, downfall in your portfolio will suddenly make you remove all the money. If your portfolio strategy is not geared towards helping you understand that, and it actually kind of protects your downside, then you will stick with that. And otherwise, you will not stick to it, right? So I think it's the second very big aspect that it helps you understand. The third thing that it understands is your financial understanding. Are you able to actually understand basic financial concepts? So as a combination of these three aspects, confidence, loss aversion, and financial, financial understanding, it creates this amazing set of, a scorecard for you. And it's very interesting the way people actually reacted to it. And by the way, this is a long questionnaire, which is like almost 19 questions. We thought that this will be a disaster because we are probably kind of getting too deep, and the consumers would kind of say, "Kya hai? What is it that you are asking me?" But essentially, we actually then figured out a way to gamify it. The questions, the way they are asked, is like completely gamified. You will love taking that investor personality.
Okay.
And then it gives you a risk score, which is again dynamic in nature. So it's like people always have this thing that either you are a conservative, you're slotted into one person, right? Whether you're conservative or you're aggressive and all that, right? But investor personality on ET Money actually gives you a range, because as a person you have a range of taking risk based on scenarios, right? So it actually then gives that. And the third interesting thing that we brought in was, it doesn't classify you as a conservative, but based on your responses and all these three aspects that I talked, we humanize the whole thing. So we call you a strategizer based on your risk profile, based on your risk score. We call you an explorer, who as a person you are an explorer. So it actually kind of tells you why you are an explorer and what is the level of risk that you can actually bear. Are you an adventurer, or are you a researcher, which is are you a person who takes way too much, does a lot of research before taking a decision, right? So I think once we have understood this core internal characteristics of the user, is when we actually then recommendation engine starts to kick in, which actually then personalizes your, which investing strategy is suitable for you. So one part is this amazing investor personality. The second part is your, time horizon. And based on your time horizon is when investing strategy is recommended to you. And all these are like, hyper personalized. So for Anupam, there will be a specific investing strategy based on the combination of your investor personality and time horizon. Okay. And I don't think in anywhere we have seen that kind of personalization actually being there.
Very interesting.
And this investor personality we were, as I said, we were actually kind of baffled when we actually put it out. but we are seeing like 86% conversion on that 19 questionnaire. The people who start, 86% people actually convert. We're seeing 3 referrals each for each assessment taken, because we just do is we ask the user to just refer if you like the test, right, or like the assessment, and we are seeing like 1.9x almost higher conversion to either people investing with us or taking Genius, right? Obviously, so I think while it seems like a very basic thing of, and everybody kind of puts it into the bucket of ki yaar risk profile karwa lo, and then we just slot you and give you that. We actually kind of work more from a humanized angle point of view to actually kind of make that much more relatable to the consumer than it being like a very alien concept.
Next logical question, you can finish your statement, sorry to interrupt you, but
Sure.
I wanted to ask you that what next after that? Just give us an idea of what are the products that get recommended to me? Just a rough. You said that there are stocks, there are ETFs, there's debt, there's gold, there is international, there's domestic. So what would a typical product, for someone whose average somewhere in the middle look like, just for our listeners to get an idea?
Sure. So if your investor personality, say, is like a strategizer, which is anywhere between a score of 60 to 80, for example, and your time horizon is, say, 8 years to 10 years or 7 plus years, just to take an example, then you will be recommended a portfolio or a strategy which is a high growth strategy. Now, what a high growth strategy is designed to actually kind of take a higher exposure into equities and lesser up to a max of 85%. So the investing strategy actually ensures that you take higher exposure based on the time horizon. So you have a longer time horizon, and your investor personality allows you to take slightly higher volatility, bear that volatility. So it recommends you a very strong, say a high growth strategy. So it matches the person to the investing strategy, and inside that you get, as I said, if you can actually invest in it via mutual funds, which is all index funds, and it will actually recommend you the allocations inside it, how much in large cap, mid cap, small cap index funds, how much in debt, and how much in gold. And the beauty is that it is very dynamic asset allocation. So what happens is that a lot of asset allocation products are fixed asset allocations, that 60% in this, 20% in debt, and 20% in gold. But the market scenario is changing rapidly, right? And we have seen that so much volatility has actually been introduced across the board in the last 2-3 years, right? So if your strategy is not responding to those changes which are happening outside, then a fixed asset allocation strategy doesn't really work, right? So it actually kind of ensures that you have allocations in this, and with a single tap, you can actually invest in that strategy. And the execution is also happening on ET Money itself. The other way to execute that strategy or invest is via stocks and ETFs. And in stocks, as I said, it will give you a recommended set of 8 stocks, then a debt ETF and a gold ETF. And that you can also execute via ET Money. So we have integrated with a partner, Small Case. Via that, we actually kind of help you execute that strategy. Think of it as, you going and doing a payment on a net banking, right? It's as simple as that. So you actually so you don't need to open a new brokerage account, do all that. Yeah, you don't need to actually. So you first connect your brokerage account, whether it is Zerodha, whether it is any other player, and then you actually invest, and you are actually taken to that investment full journey, and you're back on ET Money. Everything is completely seamless, right? So right from the recommendation of the strategy, which is hyper personalized, to the execution of it, to kind of the whole journey around rebalancing, all of that happens like completely seamlessly on the app itself. You don't move out of the app.
How does the rebalancing happen? Like, what if there's a 10% correction in the market in the next 4-5 days? Do you do that automatically? Do you take my consent? How does that work?
Yeah. What happens is, once we start to see the signals, the algorithm actually works on a multi-factor strategy. So it looks at multiple signals and then gives an alert that now your investment needs a rebalance, and that is a monthly rebalance. So we don't actually end up giving you like a multiple times alerts in a month, but we have seen that over a period of 16 years of backtest, it has ensured that a monthly rebalancing actually optimizes for the highest, returns. So it gives you, so we kind of iterated whether it should be weekly, 15 days, monthly, 3 monthly, or 6 monthly. And it ended up being 1 month being like a perfect time to rebalance, because in a month, and once you get that rebalancing alert with a single tap, you come on the app, you actually can rebalance your portfolio within like 30 seconds. It's a one tap rebalancing that happens, so it's pretty seamless, and you're brought back to your ideal investing strategy.
You mentioned small case. Is there a tab? Because I thought small case also kind of we had Anugrah on Paisa Vaisa a long time ago talking about all weather investing. So they have their own products which sound a little bit similar to this. So, and you said that you've actually tied up with small case. How does that work here?
So it's more like a gateway for us, instead of it actually kind of giving us so the way small case works for us, it gives us access to like 95% demat holders in the country, right? Because they've integrated with all the brokers. We just use them like a payment gateway, and that's how we have actually kind of partnered with them. So the whole investing strategies and all the portfolio management, the rebalancing, the alerts around that, everything is done in-house at ATM.
Okay, great. So just winding down this episode, what are the costs out here? And when you recommend mutual funds, are they direct? Are they regular? Are they commissions? How does that? I'm just asking for the sake of transparency, so that our listeners know more about this product.
Yeah, because the very basis of actually building Genius is to solve for that misalignment. We don't take commissions. There is no charge on transactions. What we have is a completely flat fee of 249 rupees a month, and you get access to all the 6 strategies of mutual funds and 6 strategies of stocks with an unlimited access. So there is no any kind of bias in that, and it's a flat fee of 249 rupees. If you compare with the value, it's like a great deal for the consumers. And the idea was that we have to figure out a way to actually take this amazing intelligence, which everybody like elites and all the best investors are using, and bring it to more set of audiences and more set of Indians. And it has to be priced at a point which is also kind of flat and affordable, right? And that actually helps us like really kind of change the game as well. And we could do that at such a low price point for a simple reason that we're using technology to the hilt, right? Everything is like technology led. So the whole data piece, the whole piece of everything is like completely is tech led.
Sure.
The other thing on transparency that you touched upon, anybody can just go and check these investing strategies that we have. We have 6 of them, and look at their performance with a very we have thrown it completely open for anybody to come and dissect it the way they want. So one grounding principle was that we have to ensure that we bring in data-led transparency, which leads to trust. Like otherwise, I telling you that it gives you 80% higher returns and protects you to the tune of 40% extra when the downturn hits, or you won't believe me for in a digital environment, right? We give you kind of all kind of information, whether it is past performance, whether it is rolling returns, whether it is annual returns, whether it is trailing returns. You can dissect it yourself as a consumer, SIP versus lump. So all that is available for the consumers to actually kind of play with and really kind of understand whether the claims that the performance that is we are claiming is there or not.
Okay.
And I think that at 249 a month, you get access to an unlimited set of features of Genius.
Sure. And since you're recommending the mutual fund specifically to me, I assume that those will be regular schemes that I would be signing up for.
No, those are direct plans on index funds.
Nice.
So, as I said, no commissions. So it has to be like direct plans. Low cost index funds are the underlying thing around it, because it actually helps us deliver higher returns as well and keep the cost low.
Yeah. And of course, if I'm using a brokerage account, then whatever brokerage my broker charges me would be as part of the cost. That's obviously not part of what you're charging them, right?
Yeah. That will be based on whatever your broker is charging. That is there.
Sounds interesting, Mukesh. Finally, how's been the response so far? What are you early signs of what people are choosing out of the 6 in investment strategies that you have? Last question.
Sure. Let me tell you, like when we launched it, we were like super nervous because it's something that at scale has never been tried, right? In terms of giving that kind of access to amazing intelligence and personalization and all that, and something that consumers would want to pay for, right? And the only thing that we heard when we were discussing this outside was that cost nahi chalega, and that made our resolve more and more stronger because you build things where nobody's looking, right, at the end of the day. So, and we have been kind of on day one, we hit like 10,000 subscribers of Genius day one.
Wow.
And it was like every 5 seconds we were seeing a Genius membership being bought. So I think the response has been more than encouraging, and we are excited to actually bring in more and more value beyond what we talked about in the every 2 to 3 months under the membership itself. So and in terms to answer your question of where the investments are happening, it's actually been quite balanced. So there are consumers, a good set of 25-30% of the investments have happened in balanced to balance plus, and the next big set is actually high growth, which is where a long-term portfolios are actually kind of which have a good equity percentage. So this is where concentration is. So it's kind of very well distributed as well.
Fantastic. I wish you and the team at 80 Money all the very best. Mukesh, come back. We'd love to have you here again when, hopefully you've got 100,000 subscribers, 1 million subscribers. Be happy to have you back.
It would be great to be back.
Yeah, always welcome back. And folks, with that's a wrap on this episode of Paisa Vaisa. My guest, Mukesh Kalra of 80 Money. Mukesh, really, thank you. Thank you so much for doing this for our listeners.
Thanks a lot, Anupam, for having me.
Great having you. And listeners, thank you for listening to this episode of Paisa Vaisa. If you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. Folks, thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
There's a quick survey to fill out on ivmpodcast.com/survey. It lets us know a little bit more about who's listening to us. And you know what? We're going to do a few prizes. So, we'll do a random drawing of maybe 10 people and we'll send you all some swag. Remember, that's ivmpodcast.com/survey where you can fill out the survey.